Hey everyone, John Henry here from School of Trade, and today we're going to be talking about Fibonacci extensions, retracements, and projections. And I know that can sound a little bit confusing, and maybe you might not have even heard of some of them, but they do very, very different things, and they are all actually separate. So let's start with the first one, a Fibonacci retracement. A Fibonacci retracement is nothing more than just measuring a pullback or a retracement. So as an example, we've got the market moving higher. We're measuring where this pullback is going to come to. Now, some of the more common ones are going to be, the 50% zone, the 61.8%, even the 78.6. You'll hear of those pretty commonly, and that's a retracement. You're basically looking to find an area that price becomes cheaper or more beneficial to enter. That's going to be a Fibonacci retracement. Now, typically you'll use something like that in the market for, as an example, looking for a wave pattern. You could use that for measuring the swing high to low and seeing where an opportune area to get into a trade would be. And again, the common ones I've just got on my fib tool here, the 78.6, 61.8, 50%, 38.2, all of those basic common ones that pretty much everyone has heard of at some point if you've been in the trading world for any period of time. So you'd be measuring from a swing high to a swing low, and you're looking for the Fibonacci retracement area to find the best areas to look to become, in this case, a seller or vice versa as a buyer. So that's going to be a Fibonacci retracement. Now, the next one is going to be a Fibonacci projection. And this one a lot of people use, but they don't realize that it's actually called a projection. It's commonly misused as an extension. And a Fibonacci projection uses 2 points on your chart. And a lot of folks, especially in almost every trading video you'll see online, calls these extensions. But those are when you measure from the swing low to the swing high, as an example. So we'll just measure from the swing high to the swing low here. If we look underneath us, we've got these negative numbers, the pretty common ones, negative 23.6, 38.2, 61.8, all the basic ones. These are actually projections. These are not extensions. A projection is utilizing 2 points in price and projecting forward where it should end up going, regardless of where this pullback happens. All that it cares about is point 1 and point 2, and where is it going to go past that. That's what a projection is, and it is used a little bit differently in the sense that we really don't care how far this pulls back. That's what the retracement tool is doing, but in terms of the retracement, it doesn't matter because we know that it could come up to 103.61, but the 23.6 is always going to be 102.04, and the 38.2 is always going to be 101.81. It's always going to be the same thing because we're only measuring these 2 points. So these are projections. Now, the commonly misconstrued ones, Fibonacci extensions. Well, a Fibonacci extension is slightly different. You're actually utilizing 3 points in price. So now we're actually taking into account the pullback. So as an example, let's make this little chart example here a little bit bigger, just so we can see it. So this move that we have right here, right up here and then up again, that's the move that we're going to be measuring. Now, if we just measured from low to high, we would have our projections up on top, but we're looking at extensions, and extensions uses 3 points, and the third point being that pullback point. Now, NinjaTrader actually has a specific tool for those. It's the Fibonacci Extensions tool, and NinjaTrader actually has it named correctly. And there's a reason behind that, because Fibonacci extensions are slightly different. So we'll use the Fibonacci Extension tool, and we can click on the low, click on the high, and come back to the low again. Now we're actually looking at Fibonacci extensions. We're taking into account the fact that we've got a swing low, a swing high, as well as how far back this next pullback or this next retracement goes. And then we're measuring where we should see price go based off of that. Now this works really, really well with ABCD patterns as an example, because a Fibonacci extension, you can utilize point 1, point 2, an ABCD pattern. This is basically A right here. Then you've got to B, A to B up here. Then you're pulling back to C, and we're using the extension tool to measure from C to the extension point where D is, which in this case is 100%. So it makes using those ABCDs really easy, but that's going to be an extension. You can use the exact same levels for these, 38.2, 50%, 61.8. So it's commonly, again, it's commonly referred to as something different, where extensions to most folks are actually just using projections. So keep that in mind when you're looking at these different types of Fibonacci levels, because they are very different. Now, one way that you can use this information is you can actually create Fibonacci target zones. So normally people are looking at, the negative 23.6% projection as their target or something like that. Well, now you can actually create a zone or an area using projections and extensions to create a range where you should be looking to take your profit target in. So as an example, let's just use this most recent move right here. We'll measure from 3 to 4. We know that the Fibonacci projection is down here at 102.57, 102.48, and 102.34. But let's see if we can create a zone using those same levels, just in a variation with extensions. So what we can do now is we can use our extension tool. We'll measure from the high, low, and then the pullback here. And then we can basically add these levels onto here. So there we go, we got them all added in there, we'll hit OK. And now what we can do is we can utilize these different locations to find a specific area or zone that we should be looking for. So we've got a couple different ones here. We've got a zone between the 38.2 and the 100% here. So this could be a zone here. We've also got a nice little cluster of them right here at the 0%, which is also the 50% and the 61.8%. So we've got all of those inside there. And just using them in that sense gives you a little bit of a different result. And we can see if we zoom in on the market here, we did catch quite a bit of bouncing between that extension and projection target zone. There was a lot of people looking at that level. And as soon as we came to the next area where we had the projection extension combination, it bounced immediately right back out. So it's a way that you can create a nice profit target on the way down, even a couple profit targets on the way down. That way you can get out where you know a lot of other people are also going to be monitoring those same areas, but you're creating a higher percentage zone because you've got a block area that you can get in and out of. So it's a cool way that you can kind of combine everything into one to make a Fibonacci target zone using both extension and projection. So that's going to be taking a look at Fibonacci extensions versus projections, as well as looking at Fibonacci retracements and target zones. If you have any questions about it, feel free to send an email to School of Trade, and don't forget to check out our trial at SchoolOfTrade.com. Have a good one.